A reminder to you guys that we have a time will change on late Saturday night, Sunday morning. Spring forward, fall back. Don't forget. Okay. We're running a tad behind, but we'll catch up. Nothing big. About 100 people have signed up, but we have about 13 people in now. Mike Becker, good morning or good afternoon. Let's see, Stephanie, good afternoon. Hi, Shari. Stefan, I'm sorry, Thomas. Nice to see you guys back. We haven't done one in a while. Jason, Andres, Jim, and of course Nate is new with us. Welcome. Oh, and Ralph is back too. Bravo. I think the last one we did was in April or March. My bad. I think it must have been April. I think. Let me see. Go there. Let me see what the date it says. This is the date. No, March 28th. I just come back from California. Yeah, my bad. We should do more, but we're going through a lot of changes with updates we're doing on our V3, which is a totally different animal. I'll give you a quick view, but not getting inside. We want to get to market timing, but of course we gotta give you a chance as we do these. What's coming down the pike? Version 3 is coming, totally different animal and different desktop and all that, because this is on the cloud base also, and we're in that transition between V2 and V3. V2 is in California, V3 is a Microsoft Cloud. As we finish this, hopefully within a month or two, we'll be all on V3, okay? But part of the problems we had, this V2 was being attacked, and we have to protect our IP, and also we need to have faster speed because we have a wider distribution of people, especially for the future product on in the I believe 4 out of the 5 continents, maybe all 5. I don't know. I guess Johannesburg. That's Africa. Yeah, South Africa. So we had to make some changes. Tremendous R&D experimentation or expenditure, but I think we're on good track. All right. Once we get to V3, we'll redo a lot of these webinars, just to be fair to you and us. That's the reason I brought it up. I had kind of held back, okay? Because there's no point of doing webinars when we're so close. You're going to be changing a lot of the features and so forth. But for now, we're on V2. When you log in, you sign up with us, we'll give you access to both. And we're maintaining both. It's extra work. I realize that, but we're trying to deal with the development versus production system. Okay, let's get to charts. That's what you're here for. I will answer questions about the webinar, the platform later. Let's go through the charts first. I know I've ended up rescheduling this a couple of times. My apologies. All right. Someone is texting me. Let me see, make sure we're good here. Oh, okay. Okay, there we go. That's my sister. She's coming for a visit over the weekend. That's good. All right. First chart, timer. Timer chart, probably one of our oldest charts that we have used. As you know, I've been tracked by Timer Digest since 2002. And I didn't get a chance to redact the names of others, so I'll quickly flash you how they operate and what things are there from off of one of their webinars. Emails, which is the issue itself. Here's what we get from them on the digest. This is the issue. The one that I was last in there was, I believe, the 8th. So I was a cover page there. 7th issue. There we go. The 8th was the date. It came on the 9th. Okay. And then we'll show. Here's this is 4th time I was covered. And here's the ranking there. I was just 2 there. Okay. I understand. All right. On the 6th month, I don't know what happened. Yeah, I dropped off on the 3rd because of the way they cut off that. The most recent one is issue that came out, I believe, Monday night. That's 28. My ranking there is the 8th for 12 months, 3rd for 6 months, and 5th on 5 months of 3 months. So it's 8, 3, 5. That's what we had by mistake for a couple of days was reversed. My bad on the ranking, but we have, well, sorry, we brought it back. This is the ranking 5, 3, 8, which is 3, 6, and 12. I had the email there when it came out, so I posted that for you guys. On the 26th, which was a Friday, gave me a heads up that that was ranking. Okay, we will do a redact of the list there. 1 second, I got it. I know a couple of guys asked that. It's a small thing, but where does this go? Hold on. There we go. Okay. Yeah, we had to redact it. The other names, they're sensitive about it. It's their publications, their trademark. I don't have any choice. So we'll be doing that for you. Okay. Our platform is posted. Now, this is 7/13. This is as of, if you bring this up, you'll see a timeline. I just updated it. So let me go back because we took a little hit. I'm still short, but I will update and we'll refresh for you. Just showing you where we are. This was updated as of tonight. Okay, this is updated. So I'll close it, refresh it. We did it this way so you guys, anytime you log in as members, you could see where we are or on the product. So this is where we are right now as of tonight. Okay. If you bring it up, you'll see the timestamp. Okay. 4:29 this evening. Anyhow, let's go to the charts and let's get going here. All right. We've come back quite a bit from intraday. By the way, we also had another day like this, which was the day before. On the day before was here, right there. We had a big day down last Wednesday. On Thursday, we came back up and then sold a little bit Friday, sold big time on Monday. Okay. And then we came up. Now, this one was at this low, which is 26.03. Technically took out this low here, but not on closing basis, if I'm right here. Let me see. No, I'm sorry. On a closing basis, it didn't. But on the, I'm sorry. On the lowest comparison, it did not. The low was 25.32. Number of people have been looking at that number. We just haven't seen it yet. But it was a huge move and was a 425 on the Dow points from the low run that we saw there. Now, yesterday we sold off about 250 points from the top. And we're trying to recover that, which is about that. We may have gotten a little bit above this. Obviously, Apple missed. Let's see how things are tomorrow. I have webinars, interviews with Stocks and Jocks out of Chicago every Thursday. And on Twitter, they pointed out what I had said. I'll show them to you here. This is what they said. These are the 3 items I put out. They put actually as a question to others. But this is what I said this morning about 8 hours ago. 3 things I see as a problem: elections, the Fed, and trade wars. We usually don't get more than one of these at a time. We have all 3 at the same time. Next week is the Fed, the 7th and 8th. The 6th is the election. Of course, trade wars are ongoing, especially with China. All right. So, do we think we're going to go back up? Well, let me address that in a few minutes. Okay, let me just go through where we are here and then address that shortly, because we need to go through the charts. Keep an eye on the volumes. This is the down volume to up volume. Okay, so did we get a decent response here? No, well, kind of, but nothing on that day. That day we came back strong, but day before on a Friday we kind of did. We were set up here, okay, above 5-1, and we didn't exactly get there on a retest. I think we got more going to the downside, but at some point we're going to be wrong. The key name in this game, the key play in this game is not to be wrong for too long. Okay. Now look up over. We're getting to overbought area. I'm going to refresh it for you, and we're there. This is after the close, and we're entering overbought area already. We haven't even got to 200 bar. As you know, most money managers below this buy their prospectus. they should be in a mood for selling, not buying here. So you got some aggressive buying there going on. We'll see if it's the second mouse is going to come in and sell and get the cheese. Is it going to be an M or not? For it to be a W, which is a low, we get that low to come up. For it to be a sell, we need this is the second part of the M. So you get M or a W. That's how we move. That's how we put the lows. Right now, we're trying to get, if we want to go low, we need to get some people long, because the market is there to push the maximum number of people into a corner. So that we're going to go down if we have too many bulls. We're going to go up when we have too many shorts. Okay, we have too many shorts here, so we've gone up. But remember, we're not day trading here. The signal. This is a bias service with timer digest. You know they let you do maybe two signals a month. You just can't do in out. At one point they come and tell you, hey, you're doing way too much, because nobody can follow you as a bias, as a market bias for big asset base, for wealth management, for mom and pops, whichever segment of a market you're in. There's so much you could do on signaling. Usually they hold you, and you could see the averages come to maybe 10, 12 signals a year, maybe one a month, maybe at maximum twice a month. I haven't gone that far. I'm somewhere in between. My average is somewhere around once every 3 weeks. I have a signal over a long period of time. Then again, I go back to 2003, and the first year, actually 2002, first year they don't rank you. They just want to see how you operate. Are you cheating? Are you honest? You don't say, hey, that email, my dog ate that, none of that crap. You got to be upfront with them. Transparency is a key game. So we're getting into a bias area of neutral. I'm sorry, over neutral into early overbought. I really like to see 150 as overbought. We're getting it slowly. Maybe by tomorrow or midday tomorrow, we'll see. We'll see what kind of number we're going to get tomorrow. Remember, ADP came is strong. 48.50 area is neutral on Breadth Trust, so we're beginning to pull back up. Yes, there is a divergence there. Lower low, higher indicator value. Okay, so far so good. All right. Well, okay. Let's move on. Same thing is basically happening here on Nasdaq. Okay, let's move on. Here's the canaries. The canaries in a coal mine, and the main thing we're looking at is transportation and Russell. Transportation is economy 6 months forward. Russell is risk on, risk off. Okay, Russell was sold pretty badly. If you go to here is transportation. Look at it this way. You'll see we sold off about 2 weeks ahead of Dow and S&P, because the peaks were 26, I believe, of January. This past January, you notice that we've sold off here about 16, about 2 weeks ahead. Transportation sold, came back to its 200-day and pulled up. Meandered not very strong while we were making new highs. As a matter of fact, it didn't make new highs. This is the ATH on top until about August of this year, and then August 21st. And now the last new high was put in about November. I'm sorry, 9th month, not November, September 21st. And it's been pretty brutal. Same thing here on Russell. This is risk on, risk off. A little bit more earlier run up. You see that in May, June. This is the small caps, 2,000 names in there. And of course, also early September, it starts giving a signal of non-compliant with new highs. If you come back here on S&P, you see that we were making near or at new highs as early as a month ago, about October 1st, October 3rd. Okay, so they left the pack early. They gave a signal. They're trying to come back in. We're going to pay attention to that. And what's key for me is these detrenders. The 50 bar detrender, which is where the price is versus the 50 bar, and then the 200 detrender is where the price is versus 200 MA. And there are some parameters that are well respected. It's in the PMT issues that we publish out. These are tested for years and years and years, and very useful for big money managers where You know, they get out and stay out. This was a big sell order there, coming there and not managing to get back up, and obviously you see a pullback. Let me put the tracking on. Maybe that would help a little bit better. See, if you put this on, you'd see that right there. When that failed, actually S&P was a little bit higher from its 200-day, and then that was a big sell order coming down. Okay. I keep track these more at the extreme. These levels at the extremes are more useful than anything else. One way to look at them is also right here. You can see that what the extremes have been. And I go back 7 years usually. Beyond that, I don't know if it's really useful. The texture changes, at least I'm on that thinking. And we have a lot of apples and oranges that we're comparing. I'm not sure I'm okay with that. Okay. 3 Sigma twice on the weekly, and it's come back. The last 3 days have been a huge bull run, and usually happens like that. Yesterday was a give back, so there was a pause there. This was a reaction. Today's the third one. Of course, Apple is out there. We have to see what Apple is going to do. Apple is trading at 211 now. Here's Apple. So if you look at this is the 5 minute, and so this is where we are now. And we had to put the spreads on them, which I posted on Twitter after the fact. Of course, I have to put it after the market is closed. Yeah, for the options because of the paid members. Okay, let's get to this chart. This is crucial. We came back. The divergence there. This is divergence is coming in around. This is Momo. This was done for Tiger. Originally, this work was done for Tiger Management. As you know, I have a number of large hedge funds who are clients, either paid or as a comp because I know somebody there. And sometimes if there's a comp, they're giving me feedback. That's invaluable because the stuff they look at, you and I will never have a chance to look at. It's just the nature of the beast. And so if it helps me, that's fine. That's fine. It's an inexpensive way to collaborate with some key people. Remember, in this business, you're up against the best and the brightest. And, one trade doesn't make you or break you. It's a long period of trades over a long period of time that matters. So, but this was developed for the Tiger. It's a modified advanced decline. And put it with the Sigma channels so we can see the vibration inside. To trigger off of that, this is Momo, this is SP1. To trigger off of that in an intelligent way, we came up with a shorter, more sensitive SP1, which is called Momo. And this is what it does. It tries to depict the Momo for you visually. Sometimes I go over this with my OTF room, the other time frame for the S&P futures guys and NQ charts. I mean NQs, ES and NQ guys during the day. Just to quickly touch up. Obviously, we put these in the PMT charts on the weekend. I know you guys follow me quite a bit. That's the PMT is one of our most successful products ever, and we get those charts to you on Saturdays or Sundays with commentary. The way I read this is that do I see a divergence? Yes, there's a divergence coming in from this point and here. So we have a divergence from here to here. We don't have a divergence since then. Okay, so we shall see. Yes, you could see that. You could call that. That's small. The issue really is somewhere from -10. And then over 10, it's overbought. We have seen, what was the read there? Let's see, I forgot. -12. I think the lowest we've seen is 14 and change. Never saw -15, I don't believe. Okay. Another tell was the 80 reading and higher on the 52-week lows in the S&P, and that's usually beginning of a push down. This came a little bit late, so it's a little bit confusing here, but we got to hold the opinion until it doesn't work, and you have to stop because then you're giving back too much, and you got to try either the other side or go flat. But this is a good signal there that we've got a reasonably good strong bottom either coming or near it. I think we're getting close to that. I believe we were 9% down from the peak. I do want to see a W because if I want to catch this, and we've been playing long and short on the NQ the last 3 days. I mean, I was a little bit sick, so I kind of missed. I traded a couple of hours only, but that was short order flow based, nothing long term. To put a trade on hold, what we call buy and hope. Buy and hope, I think it's a little bit early. We've got to see the retest failure, and something will come. It's going to be a Fed next week, or it's going to be the elections. I don't think it's going to be non-farm tomorrow, but we'll see. That's I probably put a small amount there, and then ongoing is the trade wars. I guess yesterday was it one of these days. They said it was actually possibly a fake trade war news that market reacted. That shows how market is sensitive to all of this. Again, on the weeklies, we're on a sell and then a buy. On the dailies, we're still on a sell here. Okay, so buy on the weekly, sell on the daily. This is purely mechanical. We do not run the system based on mechanical. It's another input. We run through, as you see, a number of charts. The whole concept here is preponderance of evidence. We're not an automated system, nor do we want to. It's 747 with a cockpit. Okay. At the end of the day, I'm the one who's pulling the trigger. David Savitsky, wow, a long time ago. Dave Volek and Dave Lobotsky. Welcome back, guys. Haven't seen you guys in a while. My fault. Moshe, come back. Welcome back. I just haven't been around doing any webinars. Scott, welcome back, and Robin. Okay. I think rest have been here. Okay. There we go. Stephen Gilbert. Oh my. Bravo. Welcome back. All right, let's go through here. This is a problem. I brought it up to attention of SIBO. Especially the section that started doing these after I did them for a while, coming up with a VXN or VXO, the old VIX protocol for measuring various assets. I don't like the regular VIX, neither does Dr. Whaley, fellow I worked with for a while, the original inventor of VIX. I had the honor of working with him on a couple of issues, including Alpha Series at NASDAQ. After he left SIBO, VIX to me is built for trading. It's manipulatable. I think the floor manipulates that. So watch out for that. I really like the old system, the OVX, and that's what's called now OVX. I'm sorry, not OVX. The VXO now. OVX is the same protocol, but this is for oil. The problem, let me finish that. We're getting these really, really huge spikes because they use USO. They should be really using CL. They use CL, the front contract, or at CL actually. The continuous contract, they won't get this. But I think it could be the pride, could be their ego, could be a fact that it's they want to use a equity versus a future, and you have non-contiguous pricing with UXO using futures in there, and you get these spikes there. So I just, maybe I should change the filter and show less of a plot point. That's maybe a solution. It hammers it down. That's not fair to the true volatility. But the VIX is there. Another possible buy signal here is the fact that we did get a lower, almost same reading in the VIX itself, but much lower sigma channel reading, which is comparing it with itself. Okay. You also saw that to some extent on the Contrarian indicator. Now, you're going to tell me, Fari, you're almost prosecuting yourself on not getting long here. What's wrong with you? I couldn't even see any screen Monday night. That's how painful my issue was. And to me, I think data is showing it's a kidney stone problem. So I missed that. Yesterday was inconclusive data. Okay, let's go back here. Today is a different issue. Now, why I wait all of this? First of all, that second mouse gets a cheese. What's coming up? Apple. So let's see how Apple does. Right now, so far, it has missed. Now it went to 210. Okay, we just went to 210 down here, on the trade there. I don't know what this low is. Let's see. Yeah, 210.18. So let's see where we are by tomorrow. That's one. Two, again, my calls with time. We hit both of our targets here on the downside. Those of you with PMT Pro, you saw that, or PMT, with the first target and second target. So let's come back here. It's crucial. Our job is to destroy the targets. Look at the timestamp. Look at what we went out with. Both of these numbers were taken out that day. We do one trade a week, okay? Unless we change our bias. And it's not too late in the week. I can't put a trade on late Thursday or mid-Thursday. It doesn't make sense. Well, next trade will come on Monday. Why? We also have other trades. The other trade will take over on Monday. So when we hit both of our targets, what do? We step back. Let's see what the reaction is. So we've already made a killing there. So let's come back. The following week, the week before, we had 2 hits, 2 both winners, and 1 stopped out. Now, because of where we were the week before, okay, here's the archive. Let's go to the archive. Here's the archive. Transparency is our middle name, okay? Here's our archive. Here's the targets. Go back and look at this. This is one of them. And you'd see we put another one on. Here was a bias, and here was a third one. One of them was stopped out, but we were on a very tight leash there, and the other 2 were winners. So when you have a record like that of bias changes, I don't want to go for time and dodges come to me and say, you're changing too fast, too many. This is not day trading, okay? So sometimes I trade against my bias because my bias is longer term. It's market timing. It's not instantaneous back and forth. And those who do a lot of that changes back and forth, in the long run, they're not going to be winners. If you go back and look at what some of the biggest wins are, it's always you hold on a little bit. And in the meantime, I don't want to draw the wrath of Jimmy Schmidt and his son, Jimmy Schmidt. They're both Jims, junior and senior. But I can't sit here too long, so we'll see. I expect tomorrow we probably will pull back, or on Tuesday we do. So we'll see how this reacts. At least we're in an overbought issue. Any move from here is asymptotic. That is marginal. So we're going to hold it a little bit. Okay. I just have to state the facts. The fact that I went there and give you that. I'm telling you how our signaling work. All of these said, yes, we should be. I should have gone long that night. If I was alert, I could have, but I in extreme pain. And by Tuesday, it was a runaway, and I just said, you know what, we'll see now. Yesterday pulled back to see where we are now. And both of these are beginning to fall towards the sell, so I don't want to get long here and get into a mess. SQ just came in. This is the tail risk. This gets reported late after the close, not intraday. And it's actually the work that done by some of the people at Citadel and on the Vol side, and in conjunction with SIBO. SIBO came up with this back in 2008, 2009. A couple of guys at Tiger came to me and said, hey, are you watching this? You're an SPX guy. Come on. Talk a little, because I was doing a lot of these vol stuff. I was doing vols of the vols. I was doing vols. I was doing VXOs on Google. If you go to Barron's, they are published one of my articles that we did. I sat in for Stephen Sears, the option guy, and 3 weeks in advance, we killed Google. Not that day. We said, the earnings is going to do this. And it went to our price on the earnings. We did it based on VIX stuff. So back in SPX back then, they came to me and they said, hey, are you looking at this SQ? Well, I got hooked. Now, does it work all the time? No, listen, this is the realm of big guys. It shows a tail risk on the 2 tails of the S&Ps when they expect a problem, okay? Have they made a mistake? Of course they have. Look at these cells, okay? So look at the cells here. So did the big guys were right there? Of course not. They wrote it down. A lot of them. Some sold, some bought. It wasn't all just mom and pop selling. So yes, they do make some mistakes too. Is it always going to be right? No. But Sigma-wise, we are -2. We pulled up a little bit today. It was doing better signals before than now. Right now it's ambiguous. Again, some charts we go to ambiguous. That's why we do preponderance of evidence. We look at majority of evidence before we make a call. Okay, treasuries. This is a 91-day equivalent bond yield, EBY. These other ones are YTM, yield to maturities. By the way, if you have, I'll take some questions shortly, especially from PMT users. If there are things you don't understand on PMT, probably you're not the only one. Probably others don't either. Well, I welcome you guys ask me questions, and I will answer them all. I won't cherry pick questions. Just post them in the questions. I'll answer all. As long as your language is clean, and I have no reason to believe it wouldn't be. Most of you guys have. A couple of times we had some issues who were just a little bit frustrated, didn't understand this or that. You saw wrong language, and we just closed their account. And that was it, because nothing to that. Civility is important for me. If you have a disagreement, that's fair. Let's discuss it. But I want to make sure you don't misunderstand something. Again, this is because it's 91 day. It is not 1 year yield. So it's called equivalent bond yield that we have to convert. We have to convert it. This is just a 91-day discount. These are YTMs, yield to maturities. There's a routine that you have to compound this into to get these, which is, I believe, this is 91 days, so it will be 4 times to equivalent to these. But overall, and that's a 7 year. That's a 7-year run. You could see how we have grown up in the rates all along. Boom, 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 the front end. Now, that's not the case on the 5-year, 10-year, and 30. We managed to stay down here in the 17 and 18s were pulled up. Okay. Now, this is a 5-year, so that's a good benchmark if you add the risk premium to it for your leases, your car leases, what have you. And this is the 10-year, which is for your mortgages. And you can see what's happened there. We have pulled up. We're hitting new ones. And, of course, wage growth is a factor there. You got unemployment down, and slowly now we're beginning to see wage growth. It's coming in. So inflation should come. So your yields should be technically inflation adjusted. Bingo! Apple is at 206 now. Hello. Probably the conference has started. And yeah. And this is going to be down, and we're going to look at the futures here quickly. And okay, is it responding? Hold on. Oh no, futures are closed. Okay, futures open up in 25 minutes, and that's going to be nice. Yeah. Patience, my son. Remember Captain Tico, my dog? He reads Tico. He reads Rumi. What did he say the other day? He says, night is young, quoting Rumi. So have more tea, read some Rumi. Better days are coming. So exactly. Hold to your convictions until you can't. This is about your strength, especially what Mark Esposito, one of the key members of CIBO, calls intestinal fortitude. How long can you hold this position? Because at some point, the market will get what you have. Your analysis shows, unless you're absolutely wrong. But over time, between that and risk management, you're going to be right if you're going to be successful. At some point, you're going to say, hey, I'm wrong, admit, throw in the towel, go for a next battle. But until then, you hold your convictions. You just can't bet the farm. Okay? So, and here's the 30-year. This is the insurance companies. This is the long asset liability people that they need to hold zero risk, long-term assets, and they get a reasonable yield on it. So, spot, leases, mortgages, insurance companies. So we haven't gone up yet. Of course, remember, they're going to have the runoff on the Treasury holdings at the Fed. So I think that the push here will be taken off slowly, but surely over time. Not today or tomorrow, but it's probably a couple of year process, if then. I would listen to what Fed has to say, decipher the code next to the 7th and 8th. I believe is that the 6th is election, right? 6th election. So Tuesday and Wednesday. So 6th and 7th, I guess. Oh no, are they doing 6th and 7th? Hold on. I'm sorry, I'm digressing here. That's not good. But let me come here quickly. Fed calendar. Let me go here. Okay. Here's the Fed calendar. 7th and 8th. Yeah, they moved it to Wednesday and Thursday because of election. Yeah. All right. So let's go. We have 3 more charts to go. I don't want to go too far. I want to stay with the message. 2 more left here on this, and then we have one that we use from stock charts. Is it always called stock charts? I think so. Yeah, getting old is a bitch, let me tell you. Yeah. Oh, excuse me, it's blank. I gotta watch my, yeah, stock charts, yeah. All right, so let me come back here, we'll discuss that too. All right, this is something I did for Cboe. Nothing magic. It's VIX forward structure, the term structure of the VIX, and we take the front month based on volume. Hold on. I see, it hasn't opened yet. Okay, yeah. Front month volume. It's not VXX. That's VIX futures for November, and 3 months forward. So we take November long, short February, and always check. Make sure you're in the right area. Now, the week before, the Friday before expiration of the VIX itself, not the equities, will roll over to next month. Okay, somewhere in the middle of that Friday. Not tomorrow. It will be whenever that is. It's going to be a couple more weeks to go, I believe. So this is X minus G, X18 minus G19, and the signaling is around 1. I'm sorry, around 0. I'm saying signaling is around 0. But we've gone way beyond that. If you look at this here, okay, the lows we put there and here were up there. See, you see a divergence possibly there, and then a reading there that was low. This is Tuesday, intraday, and this is, I believe, after the close, yeah, or near the close on Wednesday. Okay. Am I right? No, I'm sorry. No, I'm sorry. No, hold on. This is 26 on Friday. I'm sorry, 26 is Friday. So it's Monday. It's a Monday reading. Anyhow, yeah, Monday reading. So are we getting into risky areas? If you're short, yes, according to this. Okay. Usually this would be at this point a lot lower. We're not. Okay. The term structure still has a contango in it, not backwardation, because this is now today this is given up now, a little bit of it now, but because we have it's a bad, I call it that way. A number of other people agree with me. A lot of people don't. The backwardation is where your future prices are lower than your spot price. Well, I call that contango here in reverse because this is the inverse asset itself. So we use the language in inverse. That causes some confusion. It's okay, but the old school guys use it my way, but that's all right. It's not my way or your way. Whatever it is, you just stick to it. So did we put the low in? Potentially. Is it the low? No. Is it a short-term low? Yes. Yeah, and of course data now supports that. So that's true also. Let's come over here. This is SP2. This is probably one of our oldest indicators there is. I think 95, 96. First iteration of it was written. It was not called SP2. It had a different name. We have better data now. That is from our sources. In this case, TradeStation. We used to also do this on eSignal too. We have better data now for this indicator, and as of 2011, 2010, somewhere in there, we've called it SP2. Some of you guys used to get it on email, my emails, if you remember. We put it in our charts there, and there's analysis on that. You want to buy the 25s. And you want to sell the 75. So we're already in this one also. Yeah, over neutral into near overbought again. So has this run away from me? Yes. I might think I'm in major disaster mode? No, I don't think so. But I could be close if it continues to go. And that's how this is. So this stock RSI, one of them is overbought, no question. The other two are still rising. So I'm going to make a decision here, move on. Next and last is this chart, and let's go to 125. to give you a little bit better. We'll go to full screen here. Okay, and this is let's go to 150. Okay, maybe this way you get a better chance. This you can get from stockcharts.com. Here's a symbol you want, $SPX Alpha 2000 Romeo. Okay, this is a 200 bar number of percent of the stocks above it. Very, very rudimentary, just a scoring system. And we went to 34s. Look, we had a steep drop. We're still dropping, okay? So are we done? Maybe, but maybe not. We don't know. We'll know in the rearview mirror. But the slope of these curves are so sharp, we have dropped very fast. And the good analysis of this is in 2008, 2009, we were hitting 6 and 8 and 9 down here. Okay, in terms of low, I believe March 2009, we were at probably 6 or maybe 8. It was really low. We started drifting down past the TARP. I'm sorry, the TARP vote. Past TARP vote, it was just coming downhill. Double diamonds. Those of you who ski, you know what I'm talking about. I don't ski up to double diamonds. That's not my area. Had a couple of girlfriends who were good at it. They would do that, but not me. I would chicken out. Yeah, I'm not a tree hugger. Let me put it this way. When you go up there, you got to be careful. Longest story short, we have spent several days down here. So possibly this is a tradable low. I would call that. That's, I think, where we are. Given the 3 or 2 or 3 days of items forward, these are the issues. Now, I'm not going to vote myself. I'm a Republican, registered Republican. I've always been registered Republican all my life, but I have not voted since 2004. I moved to Chicago in 2008. My vote will make a difference in Chicago, so I didn't vote there. And 2016, I got to vote late. I had an anti-Clinton vote, but I'm very disappointed with the current system that we don't deal with facts and science and respect our word with others. And so I'm having a problem. And I know what caused here was the change here was the deregulation. We still have a huge debt. I'm very worried about the debt. And by the way, we're back up to 2008 now. 208 on Apple. Our target was 205. We hit 206. Remember, for Apple to move, that's a lot. This is the biggest stock, largest market cap. So we'll thank OTF Technology who gave us that signal. I will be more than happy to give you a quick view. You could see where OTF went to. If I do this, you'll see. This is OTF for Apple. Look where it went. Went to a signal. To where the signal, the lines were signaling. Went to that confluence. That's it. This is the technology of measuring whales, the big players. Always follow the money. Look what the prints are in volume, in block size and frequency. Forget time. It's not time-based issue. It's activity-based. So that's what we're looking for. 205. We hit. Looks like the low we've hit. What's the low we've hit on Apple? Is 205.16. Okay. This was the Apple trade, largest market cap, and thanks to Tico, we nailed it. Here is the Apple trade there. Let me bring it up to you. We said 205, 207. Was trading at 220 when the order went out at this time. Boom. Central time. That's Central time, guys. Okay. Boom. Thank you. Moving forward. So where do we stand? Preponderance of evidence. Okay. We've done all of this. Where are we? What's the read here? Hold on. Let me take this off. Okay. Back to timer chart. Let's hold on. Okay, so 2 issues. Let's go back. Let's go back to here. Okay, Fed, we don't know, but maybe we do. The market itself is already doing some work for them. Let's go to treasuries. Okay. The treasuries are doing some work for the Fed. We've come up and hit. They made new highs, boom, boom, slowly but surely. Now they're going to be mainly targeting the front end. Though for them to target the back end would not be smart. Plus, they're holding a lot of paper there. They want to sell that slowly, let it run off. So I don't think they're going to be touching that. Typically, they usually don't handle these long terms anyway. They only did that because of Bernanke. He knew he had to save the world. We were looking at a huge hole in the middle of the ocean, and the fiscal management was not there. Only monetary policy could come in to help out, and it took somebody with a lot of guts like Bernanke to come in, who was a student of the Great Depression, to come back and do that. Okay, I never ran into him at Princeton. He was way after me, but I'm honored that he was the head of the Princeton the Department of Economics before I start traveling down to Washington a lot, doing the what do you call it? Doing George Walker 43, George W. The Washington, George W. 43, and then of course what do you call it? The first things Hank Paulson did, brought them in and reactivated the plunge team, the market plunge team. So plunge protection team. I'm sorry, PPT. They brought PPT in. Maybe they knew something. I suspect they would know what they were doing with the treasury. What do you call it? With the subprimes that Goldman was running. So, but right now, some of that is being done right now. Do we have any surprises on the bond area? I'm maybe worried about subprime car loans, maybe subprime credit cards, maybe, but we'll see. Let's see how these things operate. I don't think it's a huge issue right now. I don't know if there's huge surprises there by the Fed. But let's go to the next two things. Trade wars, we don't know. Big unknown. Every time there's a little news on that, especially doubled down by the White House, the whole market goes crazy. We've seen that recently. That's not a surprise. The other one is the Fed, the elections. If you look at real clear politics, you look at that, it's an area that reports both sides. I don't like to read one side. I have two TiVos. One records Fox, one records MSNBC, NBC, CNN, and so forth. And I usually try to watch most of the news items that are crucial on each, a few minutes each. Go on with the skip button, boom, 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 on a new. You could do it on the new TiVos. You jump because you need to get the the core. The truth somewhere falls in between. I think the House is gone to the Democrats, and the Senate most probably will stay with Republicans, but it's going to be very thin. There's some talk about some races may add. I don't know what kind of percentage of probability you would assign to that, and that's very subjective. Okay, so with that, what would happen? We're going to have a Goldilocks A and B. You're going to have Democrats coming back with back-to-back hearings, and I think the whole plan here of Trumpism will unravel. What's the chance of that? Probably 50-50, maybe better than 50-50. And that's what you're going to see this market just. I do not believe there is a what do you call it? Santa Claus rally. I put that. I'm not saying it's impossible, but I would say I'm not trying to hedge my bets. You know me. Those of you who work with me, you know me. I'm very upfront with my comments. I know, and I think when I'm wrong. But I do share with you what I think, and I'll tell you why. And here's my logic. And if it's wrong, I'm wrong. You learn to own up. Something Grumpino doesn't know how. You gotta learn to own up when you're wrong, and you go for the next battle. Remember, you can't lose the war. You have to own up and say, I'm going to go for the next battle. You just can't go for another war. Too late. Then you've lost the farm. It can't work. So I don't think there's going to be a year-end rally. Let's hope I'm wrong. Okay, for the sake of the nation. Nation comes first. For the sake of the nation, let's hope I'm wrong. But that's where I see it now. And here's my last week coming in. Those of you in the chat room, you heard me. Let me repeat that again. And some of you are here right now. I said, well, when we were going through this, I said, listen, for Amazon and Alphabet to lose, and they're a software company, how could Apple win? On what? On revenue line. Remember, why? I work with Jim Wilson, the CFO for Northrop, one of the greatest defense contractors in a history of cash on cash return to investor. Going back to the 50s, the company started in the 40s, but going back to the 50s, they outdid Boeing by many, many times. Boeing is bigger, but not on earning basis, not on reliability of earnings. Okay, well, you can manage the earnings. Okay, Ruth Porat could do that for you. What she cannot do for you is the top line sales. And why? Because you have audit system. You have people who, this is the beauty of this system here. You have independent auditors who have a lot to lose. Now, Arthur Andersen did that, but look what happened to them. Well, and that taught them a lesson. Those are the guardians of both democracy and free markets. Those guys are there. So the top line you cannot fix. You can fix the bottom line by recognizing something, not recognizing, amortization. Name it, they can do that. Stock options, what have you. You can't do it with the revenues because orders come in. Okay. Now, yes, it's accrual versus cash, but you have to be consistent. At some point, yeah, they catch you. Listen, I sat on board of a publicly traded company, sold it later on to Intuit, and ours was not Ernst & Young. I forget. Oh, geez. KPMG. I think it was KPMG. Yeah, it was KPMG. You learn. As the partner comes in for a meeting once a year, as you deal with the audit teams throughout the year, I was a part of audit committee. You learn. Some things are off limits. They won't tolerate. Some things, yeah, they'll say, okay, you ongoing concern, okay, that's fine. I can let you do this, but I cannot let you do that. Certain things off limits. There's no question. Revenue recognition is one of those. So my argument was, if Amazon can't do it, Google can't do it, how could Apple do it? Especially with some saturations we see in the iPhones. Forget about their problems, just the saturation. And I don't know what the guidance is. All I know is that I gotta be short. And we're trading it below 206 again. So tomorrow should be adjustment. This is the largest market cap, and we should slide down. What happens next week? It's going to be very, very interesting. Again, real clear politics for that component if you're looking at. And of course, we got to watch what Fed does. I think some of that is in this chart already. They're probably a little bit soft. We have non-farm tomorrow. ADP came better. So mixed bag a little bit, yes. But I think the upside is somewhat muted. So are we getting priced in down here? Yes, probably. Yeah. Are we going to go to 3,000? Really? Show me. Okay. Yeah. Why? So we'll see. Anyhow, with that said, I think this is what I have to cover there. If you quickly want, I can go over if any questions on the charts. I'm sorry, in the issue. Hold on, boom, right here, guys. Here what it is. This is how this thing works. That's the proof. That's the what do you call it? Archive. Let me log in. Okay. There's archive, obviously, and archives are tied into Fridays. When you go there, these are Friday dates. Okay. By the way, we're going to open the archives. There's no point of you need to log in for the archive. Trades are old. Might as well see it. But maybe like 1 month. We'll keep 1 month or 3 issues. The current and 2 issues back. But rest is it's open. This is a live one. This one is live daily. I mean, it's a mark to market. Daily, we put it there. Whatever it is, we post it there. If it gets it, is it every day? That's not probably true. It's been like maybe every other day, definitely 3 times a week, 4 times a week. Yeah, that's doable. Very doable, very easy. And these points are bias changes. These are not time. This is not equidistance. We don't do that because that's how it's measured. They do a run. Here's the latest issue there. This is 663. Hold on. This is 663. And again, they index it based on your performance. Notice here, I'm off by 2% there. This is 91. This is 89. I'm not that close here on the 5th. Okay. James is very good. Don't know about Nathan. Sometimes these numbers come depending on how they chose and you chose. It comes on off. If you go back to our Products page, longer term, probably get a better picture. You could see over a long period of time what I've done. Boom, 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 boom. And you could, there was a lot of time I was 1, 1, 1, 1, 1, 1. So consistency is key. Again, we don't trade too much on that. We do have a bias. Now, sometimes like what happened here, let me say here, this is one after my accident. We were off 3 weeks, okay? And 3 of them, I missed money. Small stop was hit. 1 week, 2 days only, we had a hiccup in the market on the short side. Boom, made it back and then some. So I may lose money with time and digest, but usually not with the traders, because we adjust every Monday. We come in at a new location. So if we're short, we're going to short from higher level if it's on against us. If we're long and market drops, we're going to buy from lower. One of them kicks in. That's the beauty of it. It readjusts itself. Is it a reversion to a mean? Yeah, a lot of times. Yeah, it's indices. It's law of averages. So anyhow, we do update to you every Monday a trade. Okay, there's an issue number 264 once a week. There's a timestamp in real time. We'll give you our current bias and most recent bias before that, and we give you what's called the market bias chart. This gives you these levels. What reason we post this is these numbers for you, because these are weekly. You see how they're flat? The whole week that levels stay. Look how we posted the prior issue at this point. Look how these levels came to play. Look at these failures right there. How does it work? It's support resistance, but the floor definition, not some cockamania definition that somebody likes. Oh, because I want to play with this. Oh, I think I'm smarter than you. No, look where. Listen, charts is how big guys talk with each other, because they can't communicate. It's called collusion. Hello, you email. If Tiger makes an email to source and says, I'm getting short here, that's called collusion. They don't do that. What you see is they're understood. Some of these trades have worked on both sides, on both of them. They understood what these levels are. They understand third level is on the downside. This is a WS3, weekly support 3. This is a WR3, weekly resistance 3. They know what to do at that level. It's with the charts. So there's no breadcrumbs. We also give you targets. When you come in, there's a break even. That's the open as of that day, okay? Or unless it's changed. That's the open that day, and that's our benchmark. We don't want to get, this is our 20% stop if the first level is hit. The first level is hit, you bring the bound. First, you open with this stop, period, 100%. The moment the first level is hit, this becomes your next target, and this becomes your stop. You scale down. You see what I'm saying? And this is you can't lose. You can't lose on the runner, and you made your 80%. Okay? We did both that day. Okay? And this was the spread to do. 267, 262 put spread. Okay? At this time, went out. Go look at it. We covered that day. Twitter went crazy. Boom. Sold it in LinkedIn, and of course, I didn't put the signals on. I put the results on. Yeah. There's a little write-up that you read. Here's the charts. What I just went through you. It comes out every Saturdays. There's a run-up. There's a markers. Now, there's a little run-up of what SQW means. SQ. You see that. All the charts I went through is there. Okay. The sequence is slightly different for this one. It's just the way we started it. This goes back to day one that we've had in this format, which is, if you go to the archives, back 2015. As a matter of fact, I remember Scott, forget his last name, smart guy. He was with Russell at the time. 2015, we did one of these charts. There you go. Slow this one. Yeah. He showed this with my permission at SIBO Risk Management. This was our analog. Look what we called this. We were off a little bit. They were off a little bit. And then look at the ups and downs. Yeah. Gil Caffrey from Tiger wrote back to me and said, there was an article from Bloomberg that said, this is Marko Klonovic's market. You just happen to trade in it. He wrote back and he says, F you, in a polite way, He says, basically, hell with that. It's Fary's market. We haven't traded it. Just look at it, because I think he went short here. We had gone short way back here. So somewhere in, I think, I'm sorry, a little bit sooner. We went short about here on that leg. He went short inside in that leg. And then, of course, boom, 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 boom. Of course, we were doing it before too. So Yeah, that year was an incredible year for us, 2015. We changed our indicators in 2014, and that's what our this analog now in the. If you come here, yeah, that's what this portion is. We changed our indicators. We came in here and we said, give us a chance. It's on our webinars. We're gonna kick everybody's butt. There's a couple of things we're doing differently, and give us a chance. We probably need a year. Within 6 months, I was 1-1. Forget the third one. I was 1-1 for 6 months. We had nailed it. Bollinger wrote to me and says, I don't know what you're doing over there in Chicago, but keep on doing. He's a good friend from California. We disagree at sometimes, but he has got a chat when he talks about thyroiditis all the time, every issue. He says, Fatty, I don't know what you're doing over there. Keep on doing. We just killed it. And then we went, boom. My problem is here, because I was in an accident, very bad accident, lost a brand new car. Tico was 7 hours in the hospital. We're coming back. And we're going to kick ass and we're going to take names. Any questions for me? Oh, by the way, you didn't see Time and Digest chart said they're going to get on my case. Every once in a while it's okay. I was in trouble. I was sending issues out, putting on Twitter. I can't do that. But I will edit that, put it on Twitter later with redacted. Just you'll see my position, okay? You would see you would see where my name is, okay? Like here, you would see where my name is, but you see all the percentages, but you can't see their name or website, and you can see their consensus. But that's what they want from me, and that's fine. Don't want to get, they're good people. As a father and son, they sit in Greenwich, big mansion. They run a fund out of this based on the signals of other people, by the way. And they're happy campers. Where is the Apple? Talk to me. 206 now. Yeah, this is what we call repricing. Apple got repriced. So from 220 to 2016, to 206. 14 handles for largest market cap. Not too bad. Thank you, Tico. Any questions for me, guys? This is recorded, will be posted. I do have a 6:15 here. I have a contractor supposed to show up that they were trying to come in today around 3:30. I said no. Send them back because I just couldn't reschedule this anymore. I had to get back to you guys. Not fair. Gap down. Oh, yes. Oh, I see. Jess. Yeah. Gap down how much? 85 handles. Yeah. Welcome to America. Yeah. This is what we call welcome to America. Yeah, exactly. And there's no volume here yet. Yeah. Wait until they get to Monday, Tuesday, Wednesday. Yeah. You look, these prices we have as bargains. Yeah. For those who are long. Yeah. Any questions for me? Thank you, Sherry. Appreciate for paying attention to that. Yeah. This is the NQ. This is the ES. You could see they just can't get even through MBS yet. So yeah. They can get me once. They can't get me twice or 3 times. The Amazon, Google were same days. So it was a double jammed. So yes. Thank you, Stephen. Yeah, it was very bad. Yeah, some idiot. Well, I gotta be careful here because I'm not politically correct. Some young kid texting his girlfriend or wife, whatever, in a cab of a gypsy. These are gypsies. This is they move dirt for a run. $800, $1,000. They pick up dirt from some construction site and they go and drop it where the city permits them. And he did not see that I stopped in front of him, but he was, I don't know, 300 feet, 500 feet behind me. And what happened in front of us was a right turn by ambulance and 2 state troopers. They make a left turn. This is the first thing you learn in the what do you call it? The driving class. When the emergency vehicle turns, you have to stop. Well, we got hit. And we got pushed forward. We almost hit the ambulance. So, and then he started leaking. And so the people jump out of the trooper, the police trying to make sure they put that off because they thought he's going to blow up. So. Good question for Jim. Yes, it does. Yes, it does. But as of now, it does. Okay. Yes. That and of course, so does the timer digest. Sorry, not timer. So does transposition. Transposition gave a bigger signal. Okay. So let's go here to Detrender. This is some people got issues with me on that. They didn't understand what is this there. I am known for not explaining things well. Don't worry. I started with Farhad School in Tehran, then at Wakefield High School here in Arlington, and then at Princeton. I'm not good at the board explaining. I try. That's why I try to explain extra to cover myself, because sometimes I give the solution, I don't show the process. And that's why I try to now make it not to miss this time. We do everything with PMT as a template. So I have to fill in those things. I have to fill in things. Okay. So yes, it did give, because if you look at, it's a good question, Jim. Jim, by the way, I know him from SIBO. He attended some of my seminars there when it was the actual physical seminar. You can see what happened there. If I draw that, you could see. So we went to, you see that? We went to new highs there. It's already peaked. See that? We just made new highs. We retested these, but no mas. We're a lot lower. So that's what it was. Same thing happened earlier. Let's go to weekly on these, so you could see back quickly, okay? Just for levels. You could see what happened earlier in the year. So I'll bring this here. You could see. But about a couple of weeks there, you see that? Yeah. It gave a signal there, but if I bring this back, you'd see, here's the signal. We had not peaked yet. This peaked there, okay? This peaked. It's not going to be uniform. It's not going to be exactly there, because why? Order flow, chaos. You decide to buy. Why did you decide to buy? Oh, somebody said it's a good investment. Your broker had a good game of golf, and you're impressed by his golf clubs. So if he's knowing what he's doing, maybe I should follow him. I'm just giving an example. Yes, you're a realtor in Northwest suburbs. Yes, I know. And I'm down in Florida. But trust me. So other one is, hey, the shoe shine boy at Union League said, we got to buy Amazon. That may be a sell signal. Okay, it's called order flow. Oh, your daughter is getting married. You need to pay for a wedding. You need to sell. You're an insider. You know something's happening in the company you're involved with. You buy. So this order flow says, for different reasons, again, follow the money. People make different decisions. Okay, that's fair. That's just part of the system. So how do you, is that daily? Oh, I'm sorry, this is good. How do we account for that? Well, we just got to take a look at it and say, yeah, it's not going to be exact, but typically, Tran and Russell lead. Okay, and if you come here, oops, sorry. Let me do this quickly, and let me do this. There we go. Okay, let me do this. Why is that weekly? Oh, that didn't change. Sorry, I should put that in the daily. This is an error, by the way, in TradeStation. It should change them at the same time. All right, no worries. Oh, here's the problem. The blue link on, yeah, there we go. That was the problem. All right, let me save this. Okay, now I'll test it later, but this is the process. So yes, these two are signaling that, but look how congested this area is. Okay, if they sell from here, then we got more to go to the downside. Yeah, you must be drinking a lot of coffee. What happened to SPOX? I don't watch it. There was a time. That's a good point. There was a time they used to say that half of the earnings for SPOX comes from Fary's interns, because all my interns would get a SPOX card. So just as a promo. Yeah, why not? You know, I was long the stock myself. So, and then the girlfriend and the sister they just had too much, and we get into fights about selling. My sister is very bad in selling. By the way, she'll be here. I'm going to have a lot of that. She's not good at selling. She's just a net buyer, period. Okay, yes, you're up 8%. Yeah. 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 Yeah, SPOX is up. Yeah. So, yeah, I just, now where I am, see, before, Jim, in Chicago, there were 3 SPOXes within, I don't know, 250 yards of me, because I was in the busy section of near downtown, right off Halsted and Madison. There were literally 3 of them. I would step out of my building. There were 3 around the corner, not same corner, but you walk down the street, next corner, there was one, for example. Anyhow, maybe 400 feet, whatever, some very short estimate. And they were jammed. Now where I am, the nearest one is in a shopping center. Forget the parking. The drive-through one is like 3 miles away, and I don't have time for that. So what do we do here? Single cops. Yeah, there's box. That's box. But I order them from Amazon and do single cops. So, fast and quick, and you can change the text there. Okay, 82 and -12. Yeah. This should accelerate a little bit once we get to Europe. Yeah. Any questions for me? But that was a good question, Jim. Appreciate that. Last call, guys. I do have to post-process this, and I also have a 6:15 here. By the way, I'm told to drink less coffee, so I'm actually drinking a little bit more lemon juice in the morning with warm water. Sure. Year-end target, don't have any. Don't have any, Josh. Jason. And for the reason I explained, Jason, good question. I don't know who would. That's reliable. Yeah, I can put a number out there, and if it hits, I can come back and tell you, I told you so. But that's randomized. There's no logic there. The preponderance of evidence does not show valid argument for a year-end target yet, because of the reason I explained: trade wars, election, and I don't mind having a webinar again in November. Okay, I don't have any problem. Okay, hey Joe, thanks. So, but election, Fed, trade wars. I don't mind. Maybe we should schedule one for mid to late November, and let's say Thanksgiving time, and reevaluate where we are. But that's probably a good thing to do. But that's what I see here. Those three. So for us to have a good year end, I need a flush. Yeah, I want a very good bottom. Do we bottom in November? We could, Jason. Depends how we trade. Depends what the volumes look like. Bars look like. There's a lot of data to come in. I need a spike here, big spike in that ratio. Yeah. And see the CI diff? I need one of these. Where baby with the bathwater is thrown out. You remember this day? Yeah, we need a couple of those days like this. Yeah. 90% days. Yeah. People are not nervous yet. That's a good bottom. Then you can, do a extrapolation and say maybe 38% up, 40% up, whatever. And also, were we in a launch mode here? Yes, we were. Okay. Technically, we had a 278. Did it get past 300? No, but we were close. But look what happened to the launch mode. Fizzled. That's not a good launch mode. The launch modes I would get 800 points instantly. Okay. Was this a launch mode? You could consider that. Look at where we were. Okay, 150 to 1,500 points on a Dow. But guess what? Indicators didn't signal that. Indicators were already showing that the downside was getting weaker. And there was very low volume. You need baby with bathwater out of the torpedo tubes. Remember, this is the Navy. Baby with bathwater out of torpedo tubes. Not from the fourth floor. We're no longer above water. We operate below. By the way, you should see the movie Hunter Killer. Great movie. It's what do you call it? It's just been one of our feeds, by the way, on Twitter for years and years and years. That is one of our feeds. If you go there, Hunter Killer, and it's a Seawolf class, not Captain Tico. Hold on, no, not Capitan. Here's Hunter Killer sub. Okay, boom, boom, boom. There we go. This is a great movie. Go and see it. This came out Friday. Hunter Killer sub. Yeah, sorry. We've had it, I don't know what, August 2011. Yeah. So anyhow, good game theory. If you like game theory, which is all this market is all about, you should see that. Yeah, I'm not a fan of Tom Gentile. Sorry. That's Tom Gentile. I'm sorry, but not too crazy about Tom. Yeah, because of his background. Yeah, it's very shady background. Hold on 1 second. All right, there's my thing. Sorry. 1 second, please. There we go. So yeah, I'm sorry. He's done a lot of stuff, but he's been all over the place. Yeah, so be careful with Tom Gentile. That's all. All right. He has asked me several times to collaborate with him because of what I've seen him in the past do. No, I got a brand. I gotta watch it. Can't dilute that. So now, I'm not saying this time he's wrong. I don't know that. Okay, time will tell, Jim. Keep track of it. We'll see. For your sake and the nation's sake, maybe he's right this time. But I just don't see that writing on the wall. Okay. Let me close here, guys. My contractors are here. It is 6:18. Okay. Any other questions you have that I have not answered, please email me. I'll be more than happy to get back to you guys. Okay. Good night, all. Thank you so much.